this Wednesday, the 22nd of July. Welcome to today's edition of Frontier Opening Bell. Welcome, Luke Ofojebe, who is the Equity Research Analyst at Vertiva Capital Management. Thank you very much for coming, Luke.
Thank you very much, Pastor. I'm glad to be here today.
Ali is a friend of the house, analyst here on the show on a daily basis. Thank you so much, CEO, founder at Rich Frontiers Management. Good morning.
Pleasure, Pastor, as always.
We need to combine the two frontiers. Get rich on the frontiers and manage it all.
Yes.
Thank you. We appreciate your time. Let's take a quick run of our markets for the African space. On Tuesday, the second trading day, a bit of a biting of the frontier markets. Again, the rest of the world markets very hot. Nigerian sentiment was down 0.39%. The Ivorian market was down 0.24%. The Kenyan market off track 1.08%. South Africa did about 0.3% in the green, but the Egyptian market gave a big jump of 1.71%. That's 10,500. Let's look at the East African market. We have a couple of stories making the headlines. Kenya Power is appointing 5 new directors. No one is sure where the new direction is for this power company in Kenya. Meantime, the flour demand is rising. So Kenya, one of Africa's largest, if not the continent's largest flour producer, is seeing demand up nearly 85% pre-COVID period. And Kenya consumer confidence data down 11 basis points. Meantime, Rwanda report says about $50 million is the cost in cancelled meetings for this small East African economy. And in Nairobi Bus Rapid Transit, which is a BRT, the Chinese got it, 5.6 billion shillings. Is everyone happy to take a ride on this? Ali, what's your take? Are you riding this BRT?
So I think it's still a few years off the BRT. Of course, the Chinese have been heavy investors in our railway, single biggest FDI in Kenya's history. And this is just part of that sequence of lending that the Chinese government has done into infrastructure, not only in Kenya, but in Ethiopia as well, and in many parts of Africa. Let me start firstly with the currency. The Kenya shilling yesterday hit 108, the lowest on record. This is the lowest it's ever hit. The central bank was intervening, apparently, according to a Reuters report I saw, but obviously did not get any satisfaction, which frankly is a bearish signal on the shilling. I'm expecting it to move down further to about 110, and the situation is now poised to test the downside. Kenya consumer confidence falling 11 points, Nielsen. Look, I mean, we've had serious job losses. We've had a serious slowdown in the economy. There are lots of rumors that we're going to have a full-scale lockdown in Nairobi to be announced on Friday. This is on social media. Some of the bloggers and influencers associated with State House have been saying that. Look, I'm afraid that my biggest concern is I just don't see any virus strategy, not only in Kenya, but across the continent. I think, we're talking, but we're doing nothing. We're not testing sufficiently. Our strategy is, I think, so far behind the curve. We're nowhere even near the curve. And if you look at cases now, we're above 700,000 on the continent. I know we're not one country, but you can see the general trend. That trend is accelerating, and that remains my concern. The good part, of course, is we're all young, well, at least my brothers and sisters, maybe not me, but that means that we are more robust in the face of the virus. Kenya Power, Kenya Power is our main retail-facing power company. It's been very challenged because of a number of things. One, political influence, which the authorities are now trying to deal with, and that's why you've had the appointment of 5 new directors. But more, there is a problem. The balance sheet is full of holes. They've not been able to pass through cost increases, particularly around the general election when we had that. And therefore, it's been a accumulation of problems. And I think it's going to need a fundamental restructuring. The share price is less than 2 shillings a share. Flour demand. This is very interesting because I think it speaks to behavioral economics and it speaks to a macro trend. I mean, it really nosedived, as you probably know, in March, April, when Europe was locked down. Europe is our biggest buyer of flours. And obviously, when everyone was stuck in their house, they couldn't go to the florist and they weren't online ordering it. So this recovery of 85%, frankly, has surpassed my wildest expectations at this point. And I think, who knows, maybe, people are so fed up with the virus, they're taking to sending each other flowers, and that would be a great thing. Kenya's famous for its roses, of course. And then finally,
yes, Ali, because with flowers, look at the number of deaths from COVID-19 in Italy, for example, in Spain, in the UK. So if when folks can't attend the burial of a family, of a friend in a family that's deceased due to the virus, because of the social distancing, they can't attend funerals. The number of folks who can attend funerals are greatly reduced. So the best thing would be at least to send some flowers to them and say, look, and put a little note behind it and say, look, could you just deliver this to show my love and our care at this very particular time, commiserating with people. So find something.
Yeah, great point. Just to add to that point, I saw another report yesterday saying the best business to be in, not to be macabre, is the funeral business right now. And these guys are seeing demand which they've never seen before. But that's a little bit macabre, I admit. Yours was a story of something.
I know. Interesting. Thank you, Ali. Just a second. We'll talk about, when we talk about Southern African market, the Mozambique LNG project, the gas project, looks like it's the biggest business money attractor, like bees to honey right now on the African continent. Yesterday, the U.S. Exim Bank says it's bringing $4.7 billion into that deal. It looks like the Americans are not going to let go, and they're looking to secure about 16,000 jobs for Americans at the LNG construction project. Put your money where your mouth is and your mouth where your money is. Let's talk about the Nigerian market for a second, for about a minute or so. Good morning. Welcome to the show. Ayode Jebo, the CEO at Afrinvest Securities. Good morning.
Good morning.
Ayo, thank you very much. I'm sure President Buhari signing the new MTF 2021-2023 was a big story, prepping for budget 2021. Meantime, our earnings season is looking like it's taking off on the back footing with Unilever declaring 1.6 billion naira loss in first half of the year. Some analysts says the border closure could have some good news for consumer goods earnings this first half of the year. And of course, Fitch affirmed EFDB's AAA rating with a stable outlook. Let's start with you, Luke. What's in the earnings that we are seeing right now? I think you will speak to us quickly on the MTEP, but about the earnings from Unilever and other consumer goods, what do you think would be what's your outlook on them from Vertiva Capital? Do you think border closure could play some form of assistance in the numbers we're likely going to see?
Thank you, Boatin. So with regard to your question, at Vertiva, we expect that companies' earnings releases will show more declines in turnover as well as declines in bottom line. And even in some cases, we'll be seeing losses for some companies. I mean, that's in tandem with what Guinness released a couple of weeks back when the firm mentioned that investors should not be surprised when the company releases its full year results with significant declines in the fourth quarter. given that the fourth quarter of the firm is between um, April and June, given that the year end for the firm is June. So that should not be surprising because that's really a reflection of the impact of COVID-19 on the economy. And then we saw what Unilever released 2 days ago. Revenue declined by 36%. Bottom line, they reported a loss of about 519 million in the first half of the year. So what we think is really happening is more weaker demand from consumers. Basically, disposable income has shrunk significantly since the start of the pandemic due to cases of job losses, salary cuts, higher prices due to the devaluation of the naira in the month of May. So all these factors will definitely affect consumer goods manufacturing companies for the rest of the year. So we shouldn't be surprised when we start seeing companies releasing such results. So how do we think this is going to shape the equity market? So I think this month, which is July, is earnings season for half-year results. So for a number of investors, they are already aware of the impacts of COVID-19 on a number of companies. So they will definitely want to stay on the sidelines and just watch how things will turn out in the equity market. Then maybe in the month of August, where we might have seen like significant declines in the number of stocks, we might see investors picking big stocks going forward. Then you mentioned something about border closure. I mean, it's been supporting some companies that have been having challenges with cheaper prices due to smuggling of goods into the country. But I do not think the impact of that will be strong enough to offset declines we'll be seeing from domestic demand. So I think for a number of these manufacturing companies, we'll be seeing lower turnover in 2020, and that's just due to weaker demand, which in itself is a reflection of weaker disposable income. Thank you.
Very, very interesting outlook there, but we'll wait for the numbers to see how they all look like. But even if Unilever was a cutting razor, then we can all have a sense of where we're going forward. But talking about segmenting the consumer goods into household products, food, beverages, will give us a better picture when these numbers start coming out. Ayodeji, thank you so much. What's your take on Nigeria's preparations for budget 2021 and what we're doing with the MTEF? Do you think the government, July is a good time for the government hitting the ground running and meeting the budget deadline for next year on time? What's in it for you?
Okay, yeah, thank you. The MTF, that's the medium-term expenditure framework, most times comes ahead of the drafting of the budget. And one positive thing that we can also take out from this government is their insistence on trying to have a January to December budget cycle, which has a very long way, is very positive even for perception. But the elephant in the room, or the major focus now, is how would government always fund that budget? So when you check the assumptions, look very optimistic. One, I would like to highlight the exchange rate, which still look a bit confusing to most analysts, because we can see that they are still retaining 360 across the next 3 years, which we feel that is not realistic given the current situation and given how Nigeria has always depend on FX to survive, or oil. But based on being specific on the MTEF now, they are projecting for 2021 a deficit of about 5.2 trillion, a revenue of about 6.9, that's about 7 trillion. But when you look at the past budget performances, even taking out COVID, you would see that revenue has averaged around 3 to 4 trillion. So it means that when you look at the actual deficit that we may have, may be as high as 7 trillion. Government needs to they need to begin to see themselves as running a business. So when you are running a business, once you know that you cannot grow your top line, then you need to look at that your costs. Because if we are not talking about personnel costs now, because when you break it down, the non-debt element is still significantly huge. So we need to look at how we want to break down that non-recurrent expenditure. So, but by and large, looking at they're very optimistic in terms of growth to 3% from a negative or about 5.2 or 4.2%. That looks also very optimistic, but by and large, it's all going to boil down to the implementation of the economic sustainability plan, as well as some of the fiscal and monetary policy that would drive and attract private investment into the country.
I'm sure, as the saying goes, the devil is always in the details when you talk about MTEF and the budget and all of that. But again, one line item, like you rightly pointed out, that's still confusing to everyone is the 360 to the dollar exchange rate officially. The central bank has yet to fully confirm the 381 level, which we've seen on FMBQ I&E window. The central bank hasn't put that on its own official website yet. So we're trying to find out what exactly is the official exchange rate right now in the country. We're yet to find a full affirmation of that. But it looks like the central bank perhaps may have asked the I&E window via the FMBQ to do it, then let it move forward. But what's the thinking within the Ministry of Finance and the presidency and the executive branch remains anyone's guess. It's anyone's guess. I'm not sure investors like that at all. I'm sure Ali's thinking that very deeply. How do you leave everybody hanging, not knowing the exact exchange rate with which you plot your budget? But let's talk about Southern African market. I'm interested in the Mozambique gas project, the LNG. Every money is coming through. Exim Bank is bringing extra money. AFDB is putting $400 million on the table. Total has about $15 billion. Total, about $21 billion. Meantime, the takeovers and consolidation in banking industry continues. Capitex seeing Goldman Sachs coming through by 5.32% of equity in that South African bank. And General Electric is consolidating and strengthening its Southern African market, bringing a new CEO into the position. Mabunda is the new gentleman taken in there. The GSC, the gold metal prices is a big story, but the public sector wage, the officials in Pretoria says, don't ask for any wage increase. Ali.
Let me start from the bottom, Mozambique story, because this is swimming against the tide right now. The biggest FDI in Sub-Saharan Africa's history, as you said, over $20 billion. The Americans putting $4.7 billion on the table. This is a very, very big deal. This was, of course, the largest gas find since Qatar. I mean, it's a really material situation. One was concerned that you would see a slowdown in getting this project off the ground because of the earlier in the year, that massive sell-off in energy prices, because of the scenario we've had. But this is a major statement of intent. Total signing up, close to 15B. You've got US Exim ready to cut a check here. So this is a game changer for Mozambique. Without a doubt, it's a relatively small economy. It's going to change the dynamics of this country completely. Let's hope they manage it well. Of course, we had some previous scandals with the tuna boats and all that kind of thing. We've had the restructuring of the Eurobond. So really, I think it's high time that we saw good governance here. To go briefly to South Africa, this is the request for an index-linked increase in the public sector wage. This can't happen. We've all looked at the numbers. The government simply can't afford to deliver that kind of wage hike. And I think you're going to see more and more language to that effect. JSE mining index, of course, we had this huge surge in gold prices and even more in silver yesterday. You folks might have forgotten, but in 1980, silver reached $50. We're currently around 21
2022,
and a
yes.
half, 22. That was when Mr. Bunker Hunt and his mother tried to squeeze the market. And I think we're going back up there. I think, we got rampant money printing. The value of precious metals can only go in one direction, like you were saying before we started the show. Finally, Goldman Sachs buying 5.32% of equity in Capitec. Capitec, the fastest growing South African bank. And that's a very positive statement, I would say, for Capitec. It gives them a lot of firepower and a network that they can leverage to their advantage.
Let me ask my colleagues within the Nigeria space, IODG, for about a minute or so on the Mozambique NLNG gas. When you consider the volume of money going into this gas project, we have our own gas project here, we have NLNG, which is already running, but we have new gas projects. Why do you think we've not been able to attract this much FDI coming into our hydrocarbon industry, oil and gas, and all of that?
Yes, this has been lingering for long, and it's we can narrow it down to enforcement of contracts. For most of the PPP arrangement that we've been having, there's been most of them have not kept government have not kept to their part of the deal, and as a result, most of the foreign direct investors are not really excited at um, investing in Nigeria. You would see it based on the FDI figures. But beyond that, even the environment, the bureaucracy, registration, I know has improved. But if you look at vis-a-vis the insecurity that you also have and our very poor infrastructure states. So when your cost of doing business would be higher here in Nigeria than in neighboring countries. So they will prefer to produce in those countries and import to Nigeria. But when we're talking about gas, we know that is the future. It's not been exploited as much as possible. You look at even in Nigeria, most of Seplat is diversifying into that. Oando is also looking at the gas space because you look at utilization. Gas, especially for cooking gas, people will need as urbanization also improves, people would also adopt the usage of gas despite the perceived insecurity within that space. But we feel that there's a lot of opportunity within that space, and it's sad that Nigeria cannot attract any meaningful or significant direct investments within the gas sector.
I'm going to ask Luke what his take is about the market for this week. Today we have a few, I think we have an option today from the debt management office. I don't know what the thinking is from Vetiva, but quickly let's touch on North African markets quickly and check it through what's the big story. The EGX yesterday beat the rest of that region by 1.7%. Egypt is declaring July 23rd as official holiday to mark the 1952 revolution of, I think that was during the president of Abdel Nasser. And then you have the Egypt National Bank is backing the health ministry, 60 million pounds, oil hands on deck for the COVID-19 pandemic. Algeria says its oil revenue will be down $10 billion this year. That's a whole lot of money. Let's talk about this, Ali, for about a minute.
But how they're being accepted into the EBRD. They've been fending off the inevitable, which is a requirement to go for some kind of financial support. They've been avoiding going to the IMF or the World Bank. And I think they're going to have a shortfall this year, and they must be betting on the EBRD meeting that shortfall. Algeria very dependent on gas, oil and gas, and of course those prices have been soft, underwent a huge infrastructure program, which they're still paying for at the moment. To Egypt, that's the National Bank backing the health ministry, obviously remaining invested in trying to staunch the virus spread. And then an interesting report which was talking about Tigray province and the Horn of Africa and Egypt, and saying that, you know, it looks like Prime Minister Abiy is teaming up with Isaiah Afwerki and teaming up with Al-Sisi in order to put in a chokehold on his Tigray province, which has been a thorn in his side, and looking to do that as a quid pro quo. Yesterday he said, we're done with filling the dam for this year. That's obviously a move towards reconciliation with Egypt. So fast-moving, fluid environment, keep an eye on it over there.
We will. Politics and geopolitical rustlings and positioning is all part of the global economy and markets. You've got to protect your own turf and then take care of your neighbors. And then you need your friends and enemies within the space. It's all about the world we live in. Luke, what's your take on today's fixed income space for Nigeria?
So in the fixed income space, I think sentiment will still be more influenced by movements in oil prices. So we've seen oil prices at the moment crossing the $44 per barrel mark. So we think if it holds steady at that point, we might see renewed sentiment in government euro bonds. We might see yields declining further in the euro bond market. Then in the fixed income market, I do not think that will materially influence trading sentiment. However, we might see some buy-side sentiment in the mid to long-term bonds due to this improvement in oil prices, but it won't be as strong as what we see in the government euro bond market. Then for the equity market, I still see more of negative trading sentiment, mainly due to the fact that corporate half-year results will not be impressive due to the impact of COVID-19. So we expect investors to further sell down their positions in the equity market. So we see that trend persistent for the rest of the week.
Okay, thank you, gentlemen. Let's leave it there for today. Quite a lot to do. It's early morning here and it's getting to a midday in Nairobi. So we got to let you guys go to do the trading day. Thank you so much, Ali in Nairobi. Thank you so much from Rich Frontiers Management. Ayodijebo, thank you so much from Afrinvest Securities, and of course, Luke Ofojebe from Vertiva Capital, Equity Research Analyst. Thank you all, gentlemen. Have a great day, and let's get together tomorrow to continue from here. Bye for now.